Okay. Today is Tuesday, uh 2:17 a.m. It is December 16th. Now, I have been in the I traded like tens of thousands of times. I traded securities tens of thousands of times. And each time, well, okay, sometimes I get lucky and I'd make money. But on a specific period, I would lose on a consistent basis. Okay, I would lose on a consistent basis. Now, what I know that I didn't know in the past is this. Okay. Um, see, I'm trying to figure out why I entered into the trade in the beginning. I don't know. I can't pinpoint exactly the reason why I would enter into the trade when I first initially started. I'd see a green candle and I would get in. I think that was the idea. Okay, I had the right premise. Okay, because it helps to enter into the trade whether it's a green candle or a red candle. But I realized that I could get into a trade based on a green candle. But what I didn't know is that even in a downtrend, there is a candle, a big green candle mixed in there. And so what I would do is I would I would focus on that green candle and I would keep trading it. As long as the trend was going up, it was okay. Because usually a big green candle will have a uh, a pullback. But when the market is in a downtrend, there is no pullback. It's a trend. It's going down. That green candle is just a relief of the sellers who sold way at the top. Now they're buying a little bit to lighten their load, right? And so then I thought to myself, okay, so then today I thought I was trying to I was like, see, when I was in the throes of like emotion and addiction, I didn't really calm my mind to think about what I'm really doing. Then it finally dawned on me, okay, so why are people using like indicators and all that stuff? Why are people looking at candlestick formations, and why are people using fundamentals? Okay, because the first of all, the fundamentals tells me what the trend is. If the fundamental is in a negative situation, the market is going to tank. Okay, it's simple as that. That's what happens. Unless the market has already calculated what the news is going to be. But generally speaking, it's gonna go down. And if the news is good, it's gonna go up. So then I thought to myself, okay, so I was trading here, and then I looked at the Nasdaq futures, and I'm asking myself, okay, so what? So where do I get in? Okay, in what situation would I get in? Okay, then I saw that the price action for a period of 20 minutes on a minute candle, it was just it was just going up and down in that area. So what it was doing is it was it was it was in a range bound situation. It didn't know what to do. So if I were to compress that into a single candle, it is essentially I guess it's called a doji, right? It's a very thin candle where it entered, but it flopped around, and then at the entry price, it exited that candle. That's what it is. So then, would I enter into a trade? Would I enter into a trade when I see that? Of course not, because it's indecisive. Sure, sure, it got there based on the previous trend, and then it was doing this, right? But but I cannot use that to enter into the trade because I don't know. I don't know unless I have some other information, right? Unless I have some other information that tells me that whatever I'm seeing there is just a pullback. something that reinforces my thinking that okay, that is a pullback. So I could just start adding into it. I can just start adding into it because that's a pullback. Okay. But if I'm not certain or statistically inclined to think that it is a pullback, then I wouldn't know what to do. I would just take care. I would see that as a doji, right? And it's indecision. It's range bound. It's not moving. Sometimes it could have a like a 12 or 10 to 12 hours of long session where essentially it's just moving sideways. So I was watching the Nasdaq futures, and then I saw, and I drew a little resistance line, and then what the candle did was it poked through, and it held, okay, it held that price, and then I subsequently made a small trade to see what would happen, right? And so what happened was after it pokes through, it started to go up, okay? So it told me that as soon as it broke through, on a momentary basis, what it will do is it'll connect to that theme of what it wants to do, and that breakthrough, that crossing over of that resistance is saying that there is enough energy to that thought of moving up. That's why it did that, and it held that price. And so, sure enough, for a momentary on a short term basis, it continued with that thesis. And so then, okay, so then my idea is to find those locations where I see that it is breaking out of that current theme. Okay, whatever the current theme is, whether it's going to be probably a range bound situation, right? And it's there's a change in the theme of it, and it's indicating to me that there is a change in the theme, maybe using a alert that tells me, okay, as soon as the price crosses over for this particular security, that means that it has broken out of that range bound situation. Now it's moving in a particular direction, right? And so I thought to myself, okay, so all trades will be based on that information. All trades, whether it's a complex signal formation of candles, okay, whether it's 10 minutes or 20 minutes or 30 minutes, something is indicating that there is a imminent. I heard about these people who are like penny stock traders. So what they do is they wait until, I mean, a lot of times what the penny stocks will do is apparently it'll languish for a while, and then when it starts to break out, a volume increases, and then the candle starts to break out of the range, and then soon as those two characteristics are there, followed with news supporting it, then it's going to break out. Okay, so that's when they enter into the trade, and all sorts of chaotic things will occur. It'll go up, it'll go down, and so wherever you enter, it could be. I mean, things get really interesting at that point. And so I thought to myself, okay, so now what I need to do, uh, and it just occurred to me that's what I need to be doing, okay? Because I'm sitting here for the past 5 years, like losing sleep, sitting in this chair, on this computer, and then just trading in and out of very small scalping kind of a trade. Uh, so I would enter, I would make a little bit, but when I lose a lot, and so I would lose the account. But what I need to do is something that I should have done when I was. This is why a back testing is a requirement. This is why a back testing is a requirement, because back testing irons out all these things. But I did not back test. I was doing forward testing. So essentially, what that means is, if I do a back test, I'm saying, okay, so I have this reason. I have to verify that this reason is valid in a certain amount of time. So when that happens, then I enter into the trade. And then that means that I will only enter into the trade when I see that particular situation that I have back tested. If I had not back tested, then I wouldn't know what to do because it wouldn't fit in. I would see a lot of candles, but it's not the formation that I'm looking for in order to enter it into trade. And so I thought to myself, I literally, from opening of the forex market to the closing of the forex market, I'm sitting here trading. My eyes are getting strained, okay? My body's aching, and and I would be trading from open to the close, like in and out, in and out, in and out, tens of thousands of times. But the reality is, if I truly know what I'm doing, then I would look at a particular pinpoint locations where I find it an ideal situation to enter with some size, so that I could limit the amount of trades that I take by maximizing the effort that I place into these trades, instead of like putting all this effort into like hundreds and thousands of trades. So when people like scalp, uh, even people who are scalping, they're not like trading all day. They're scalping at a pinpoint location where they scalp based on what they're seeing. It is very similar to swing trading, but they're just looking at something different, but on a shorter time frame. That's the only difference between a scalper and a swing trader. And so when somebody is like scalping all day, I mean, they just truly don't know what they're doing. I don't know what I'm doing. Okay. And so what I need to do after 5 years, there's a lot of people in the market who are smart. So I have to be smart too. Being smart means I have to conserve my energy. I have to conserve my effort. And then I have to make sure that the effort that I'm applying is maximum. Okay? It's not, I can't be wasting my time trading something that is that is a, that isn't really an A plus setup, right? And so what I need to do is identify critically the areas that I want to enter into, and say to myself, okay, so I'm going to enter into this trade because of this reason. And then when I see it, I can see whether it's going to be worth it for me or not to take the trade or not. Because as soon as I see it, okay, whether there's an area where I can get into. So I've seen like a lot of the YouTubers do that too. They wait for a certain things to occur when there's a large like a gap, because that's where a lot of money is made, because there's a lot of movement that occurs between those guys, because it's going to fill. And so when certain things occur at a certain point above or below a gap, then it's going to tend to move into the other area where there's going to be an extreme amount of movement. Okay. So it's very similar to like certain days when things are moving fast, when things are moving slow. Okay. So a lot of people prefer to trade like at the opening or at the close, right? Because of the volatility in the market, and the way, and they're able to take advantage of that. And so now I see. Now I'm beginning to see. Now I need to like reformulate. I have to reformulate how I'm going to trade. Okay? Yeah.